What's the difference between a line of credit and a loan? So I get asked this all the time. My name's Jonathan Federa, founder of Integrated Business Financing, and I've been in small business lending for the past 15 years. So a couple differences between a line of credit and a loan. A line of credit, you are approved for a total amount of financing, right? So let's say it's $200,000 and it's a 36-month line of credit. All that means is that at any point you can draw on those funds, and you're only paying on what you draw. Okay, you're only paying interest on what you draw, and your payment is scheduled based on how much you draw, and it's scheduled to pay back in 36 months. If you were to pay it off early, all the remaining interest is waived. So a line of credit is really something that every single business needs to have, and it should be set up. And the reason being is you can use it to grow, you can use it for all your short-term needs like marketing, inventory, adding to your staff, supplies, anything like that. And it's great to have just in case of emergencies, right? You don't have to have large balances on your line of credit, and in fact, you really shouldn't. So it gives you a lot of flexibility as a business owner. Now, a loan works a little bit different. Let's say you're approved for a $200,000 loan. You are going to actually take whatever that is. So you might take 200, you might take 100, and it's scheduled to pay off, let's say, in 5 years, or if it's an SBA loan, 10 years. However, you can't go back and redraw on that. You're paying principal and interest payments. Now, a loan you can still pay off at any time and save on the remaining interest, but you cannot go back and redraw. So with a loan, you don't have that level of flexibility. The way I like to explain it to everybody is a line of credit every business needs, and a loan is for one specific purpose, meaning you want to buy a building, or you want to finance a piece of equipment, or you want to open up another business. You're using the entire amount of that loan for that project or for what you need to do to grow your business. All right, that's really the main differences between a loan and a line of credit. A line of credit, when we're talking about requirements, typically a line of credit you can get if you have 650 credit or better, you've been in business at least a year, and you're doing $30,000 a month going into a business bank account with great cash flow. Also, a line of credit you can really get set up in 24 to 72 hours. With a loan, typically you need a little bit more documentation. It takes a little bit longer, especially an SBA loan. An SBA loan can take anywhere from 2 to 3 weeks to 3 months. Okay? And when you're getting a loan, you're typically providing a lot more documentation, meaning tax returns, financials, a use of funds breakdown. So a loan definitely takes longer and has more documentation attached to it. And typically the requirements are a little bit stricter, meaning you have to have 680 credit or better, strong financials, a strong personal financial statement. Those are really the two differences between a loan and a line of credit. I hope this helped. If you have questions, please reach out to us, and we will see you on the next one.